Hello traders, Gary Wagner here, approximately 11:15 in Honolulu, 5:15 in New York. It is Thursday, the 14th day of June 2012, and this is the daily report for gold and silver. Nice showing in the market for gold, soft in silver today. In other words, a mixed bag. Gold currently trading up $6 on the day. 1623.10 is current cash price. And when we look at our August contract, that's sitting at 1624. We have had a low of 1608 and a high today of 1629. Silver off about 22 cents, 28.74, Kitco's current print, with the low of 28.13 and a high of 29.24. The first chart that I want to look at this morning is going to be a shorter term. This is of the cash market in gold. It is in Henkin-Ashi format. The time duration 432 minutes, so intraday work. Reason for pulling this up is you can see quite clearly as we hit this bottom, we went pretty solid to green, and here a little bit of sideways movement, and then we went back to green. But here is what I'm noticing on the short-term bars. In terms of the relative strength of this particular uptrend today, this doesn't speak overall, you can see that it has been waning over time or lessening. And why do I say that? The best indication, technically to me, is going to be the Henkin-Ashi charts, because what they allow us to see is really the strength in a visual way or a visual cue. You can see as this market began to really clip up in here that we have good candle size, bodies, that's what we're talking about in here, and the absence of these lower wicks in here. As this trend continued, you can see that little by little, these body sizes have begun to shrink or condense in size, and you're getting the first signs of any kind of a tail. Now, does that mean that this particular trend is over? Not by a long shot. It simply means that for the time being, the strength of the trend seems to be diminishing. Now, the next chart we'll take a look at today is going to be a daily chart, August gold, COMEX contract. And we have been using this chart as of recently to look for different support and resistance levels. I think you can see quite clearly we do have a nice up day. This is in Henkin-Ashi, so you can see we are right at the area of this 23% retracement. We're sitting at 1624, and you have 1626 being this particular 23% retracement. It's pretty evident as we take a look at some of these areas that you can see that right in here, for example, the beginning, right after our fall, this would be 1920, the end of last year, its first correction takes it to this particular area, 1620, right in that area. Market trades up, and then on its next retracement or correction, it comes down to test this first of a real double bottom from here to here, and really almost a triple bottom. It's right within this vantage point, but you can see that the real support was right in this area. Here, you don't get any concrete information from this particular area, but you do see levels of support right in here. As the market traded down, it wasn't able to hold that support, and of course retested this 1520 area. The low here, I believe, was 1532 before our current activity, in which it's now trading up and higher. But what you can see is that on a tentative basis over the last month or so, it hasn't really been able to breach this. So the easiest way to look at it is what we first saw as support right in here, support right in here, is now becoming resistance right in this area here. I think it's going to be a soft resistance area. I think it will make it through that point, and if in fact we're correct, I'm looking for 1685 as my upside target. One other way to look at this resistance area is a longer term cycle. This is our Elliott wave chart. It also is the chart that we have been using to plot our very, very long-term channels. Now, I've gone ahead and blown that up so I can illustrate a point to us right here. This has been our primary channel, of course, as this market has been tracking up long-term. This trend started really in 2008. This is the upper level of the channel, as you can see here, and we really only had one point in which that market broke above, broke back below, and then began to trade within the channel. Now, in the same way, this is a point in which it's broken below. But what you can see right now is we're getting very, very close to price point going back into this channel. And that, to me, in terms of a technical basis, would be a very, very bullish statement without a shadow of a doubt. In other words, we've seen it track above this primary channel. Now we've seen it track below this primary channel. If it re-enters this channel, I think on a technical basis, we have some strong evidence that this bull market is absolutely still intact. Lastly, let's take a look at silver. We are looking at a daily chart, July COMEX contract, and it is softer this morning. As we spoke about the other day, it's pretty easy to see that at least for the latter part of this particular month, we have been seeing this market track upward, but staying within this channel itself. Low being defined by this intraday low right in here, and that is at about the $26 mark, and the high being around the $30 mark. So in other words, a $4 range. Now, this chart itself is in Heikin-Ashi format, straight candlestick format. I'm going to go ahead and blow that up. And the reason that I want to keep it in candlestick format, I'll convert it at the end, you'll see, but you can see really these relative small bodies in here. There's really no sign of absolute strength. And as I said, we have a lower date today. When we go ahead and convert that, and all I'm going to do is add the Heikin-Ashi as a study, you can see that we have this almost alternating set of candles. When we look at a defined market trend, it's going to be a series of just solid green. They'll get softer towards the end of that particular trend strength. Here it corrects a little bit, and then you can see this body size, and this is as it went up to $38 per ounce. When we look at our current trading activity, this is all defined within this channel that we just spoke about, but you're getting alternating candle colors. Alternating candle colors, simply put, is telling us that there is really no clear trend according to the Heikin candles. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Friday for the weekly wrap-up. Bye-bye.
Pick up every